Welcome to Econ Updates, a bi-weekly review of important economic information moving the markets. Hello, I'm Steve Taddie, Chief Economist with HoyleCohen Wealth Management. Last week, CPI came in about where we expected at a 3% gain for the year. Now, that's about a third of what it was last year at this time. PPI, which might be a new term to you, also continued its slide, coming in at less than 0.5% increase in the last 12 months. Now, PPI is important because it measures the costs of the components that go into the goods and services that we buy, which is measured by CPI. So in this case, lower is better. Now, behind the scenes on the PPI number are the components that lead into it, which is intermediate goods and raw goods. Now, for the last 12 months, the price index of intermediate goods dropped about 15%. The price for raw goods dropped about 35%. Now, on a month-over-month basis, now you've heard me talk about month-over-month as being kind of a forecastive tool, meaning the most recent economic data, and you play it forward for the next 12 months. On a month-to-month basis, you can see the slide continue in intermediate and raw goods because intermediate goods dropped 0.6% in the month of June, and raw goods dropped 2.6% in the month of June. What that means is there's a lot less upward price pressure going forward. Now, we think that the Fed's past actions will accomplish their objective, but whether the current data is compelling enough to stay the Fed's hand is debatable. And it's their view that matters as they have the votes. Should the differential between CPI and PPI persist, it becomes a slight positive for corporations as the prices paid for inputs to the goods and services sold rise at a lesser rate than the prices received for selling those same goods and services, leading to higher profit margins. Now, a topic to keep an eye on in the future is productivity, or output per hour. Productivity is how companies offset rising production costs to maintain and grow profit margins. It's not been a pretty picture so far this year. While off the record lows of last spring, the year-over-year measurement is still negative, which hurts profit margins. Now, it's been a good week for economic data, and the markets took notice, heading higher. This is where we start the week. Thanks for tuning in.